Hey everyone, welcome back to another Chart With Me video. And in this video, we're going to talk about US30, also known as the Dow 30 or the Dow Jones Industrial Average Index. So just wanted to show what the chart looked like from last week. And basically, it played out just how I said it was going to play out, especially for the buys. So it was extremely bullish this past week. And these are all daily candles. So pretty much that price action is, oops, let me move over a little bit. That price action is more so up in here. But let's go ahead and go to the weekly time frame like we always do. You can see nothing but bullish candles pretty much 1, 2, 3, 4 weeks in a row. And this past week also closed bullish, and it closed with 503 points, up 1.27%. So that is amazing. So let's go ahead, like we do always, remove all of our drawings and start completely from scratch, mainly because I like to start the week with really clean candles or at least clean charts. And then let me delete this alert. Okay, got it, because I don't need it anymore. So this is the weekly candle. So like I said, nothing but bullish candles. One thing I do see kind of as a caution is the fact that price came to this past resistance around 40,000. It did break above that. However, we got to see how Monday kind of ends to know whether or not the price will continue to move up. We'll know that based on how the Monday candle closes. If it closes bullish, then that means that there's a higher possibility for price to continue to move up. If it closes bearish, then there may be a reversal coming, but we won't know that until the market does its thing on Monday. But generally, I am bullish on this, mainly because the overall trend is up. And then if we hover over where that resistance is around 39,927, the candle did close up above that zone. So that's going to be a really good signal for price to continue to move up. So let's go ahead and get some more detail by going down to the daily time frame. We can see that here's today's candle. The market closed a few hours ago and the candle closed bullish. Okay, amazing. So even more confirmation that price could potentially push up. The one thing that I see is that price did not close up above this previous daily candle, even though the previous day closed bearish. It didn't close up above that. So that's why I kind of have a little bit of a pause for concern in terms of where price could potentially head, because it did break up above these highs, but it didn't break up above the previous day's highs. So anyway, so what I want to do is actually draw a level at this past resistance level. And I want to draw it like this. And I may make this a little bit slimmer on a smaller time frame, just so we don't have a big block of text or a block of this rectangle taking up our screen. So I remember earlier in my journey, I used to have these really big blocks and it made sense to me, so it was all good. But now I've refined and I like the way that I do charts even better. So I wanted to draw this in this way because I wanted to reflect these two previous resistance levels, and then also I wanted to reflect the fact that we did form a support with these two daily candles. We have the candle that broke up above that level. We have this really tiny bearish candle signifying weak bullish momentum. And then we have this bullish candle for today forming a nice support. So pretty much as long as price stays above the support, then price will most likely go up. So let's go ahead and go to H4 time frame and see if we can get a little bit more data. Actually, before we do that, let's go back to the daily. Okay, and then I did want to mark off another level. All right, so right here, kind of the same thing I just explained. I want to mark off this little support level for the exact same reasons. If you look at this looks almost the same as how it looks right now. So something to just kind of pay attention to when you're looking at the markets. All right, so the other thing I wanted to draw here was this line right here, because we have this old resistance right here. We have this candle that broke up. Now keep in mind we're on the daily time frame, so I like to use higher time frames in order to get my confirmations and then take the actual trades on lower time frames. So that way I can get a smaller stop loss. I'm still playing around with different stop loss sizes on different markets, but this is a really, really strong level, mainly because we have this resistance here. So let's go down to the H4 time frame. All right, so let me scoot this in a little bit. All right, so starting over here, we see all of this consolidation right here. Price broke up, price came down. That looks fine to me, mainly because it's kind of in the vicinity of where price currently is, and we want to prioritize recent price action. One thing I am going to do is draw a line. Now you can draw a box line, whatever you want to do, but what I want to do is draw a line right here at the top, mainly because, let me get out of this and then zoom in really quick. All right, go back to full mode. Okay, cool. So the one thing that I see right here is this resistance level on H4. Now, when I go down to a couple lower time frames, I may have to adjust this, but one of the key things here is the fact that the H4 time, or that this H4 candle broke up and closed above this former resistance. So there is a possibility that for this upcoming week, this price may come and fill this wick over here perfectly at 40,052. So it may do that, and then if it breaks that, then it has a potential to go someplace else, and that someplace else we obviously don't know because this is the highest high in this particular market. So it's really exciting. I really like to trade breakouts, so I will be looking for that for sure if I haven't already taken 2 trades in other markets. So I don't take more than 2 trades in a day, so that way I don't overtrade, and that's been helping me keep a lot of the gains and stay profitable. So little tip if you're trying to become consistently profitable. All right, so let's go ahead and actually let's make this line a little bit slimmer. Let me push this up right here. All right. Okay, right about there. I just wanted this bar to cover the wicks here, so that looks good. This actually looks really perfect right here. So let's go down to this other level that was drawn on the daily. And I'm actually going to, so I see this resistance zone right here, and I call it a zone because we have a couple resistance, or actually a few resistances up in here, but then I do see this support. So I'm actually going to take this line and make it a little slimmer, and then I'm actually going to put it right here because we have a resistance actually right here, broke up, came back down, so this was a big fake out move, and then at some point in the future, price came here, broke and closed above here on the H4 time frame, formed a support, and then took off to the moon. So I really like that level right there, and I think that's all of the levels that I have. So yeah. All right, so let's go down to H2. And basically all I'm doing is just seeing what price has done in the past. Wow. Okay, so we actually have more data on H2 than we did on H4. So you know how I drew this line because I saw a resistance on H4? I'm actually going to push it up a little bit. Actually, let me see if I like that. So if I move this line up and put it at H2, that looks fine. However, the way I had it before, I actually kind of like that better because we have more touches. So I'm just going to straighten this line up just a little bit. Okay, right about there. And then we have this fake out right here, and then we have price up here again. So once again, it's the same scenario. If this, oh, actually this candle closed bearish. So, so maybe when the market opened, maybe it'll push down a little bit before pushing up. Now, if it breaks below this 39,838, then we may have to do something different. We'll talk about that in a second when I give you my game plan for this upcoming week. All right, so let's go down. Actually, before we do that, let's look at these other ones. This still looks good, and let's go ahead and, oops, what is going on here? Okay, And then this still looks good to me because this is that line that we made smaller. We probably won't have to adjust that anymore. So let's go to H1. Okay, so the lines from that standpoint is still looking good. I can make this slimmer if I wanted to, but that's more aesthetics and not necessarily have anything to do with the markets. But one thing I do want to look at is this level. See how I had it up here and then I moved it to right there, and that was a really good move because now on H1 we have a lot more information. We have the resistance that formed here, another resistance here. This was basically a fake out, and then we have this bullish bearish candle. This is essentially another resistance right here. It's just a little tricky to draw it because we have one candle that's much higher. This bearish candle actually gapped down when it opened and then continued to push down even further. So once again, my kind of analysis is still the same on this in terms of waiting to see what happens because price could easily come into here and continue to push up. And even though the overall trend is bullish, depending on how you trade, there is a possible short opportunity below here, maybe to about right. Let's see, shift or control, I can't remember. Okay, so anyway, um, opportunity, I don't know what is happening here. But anyway, an opportunity right here in order to shift or, oh, I see why. I have the path tool. My bad. I was supposed to use the arrow tool, but basically from 39.832 all the way down to 39.5, kind of 50-ish zone, this would be a nice price target. Like I said, this would be considered a counter trend, especially because generally the market is up. But this is an opportunity. But the thing that I would probably do is actually let price fall, let it form some sort of consolidation around this zone. And then once it breaks out of this consolidation, ride the trend up. So that will be my plan. And just know that price could potentially also come down a little bit further, mainly because this is a really strong, like this level right here at 39.30 or 39.381 kind of zone is a stronger level than this level up here. And you may be asking why. And the reason is, ooh, that looks weird. Let me make this a little bit, spread this out a little bit. All right, so the reason why is because we have a lot more touches in this zone than up here. Here we have quite a few touches. Let's just say 5, 6, 7. 7, but then right here, even though some of these candles are not actually touching the line, they're still in the zone. So we got this really big rejection, push up. And then we have a lot of little rejections right here, but eventually it pushes up. And then we have this really big rejection candle right here that came down is like, nope, not having it, and then came up, and it was like really big rejection. So I see, actually, was I in this trade? I don't have all the markers, but I remember, no, it wasn't on this market, it was on gold, where it did something similar. The rejection wasn't as bad. But anyway, and I managed my risk, so I didn't hardly lose anything. So anyway, but this was a really big rejection, and then we have all these rejections here, and then we have the support that formed, and then this really big bullish candle that formed. And if I'm thinking back to this past week, I know we had some significant data releases that came out. There was I think PPI, which is the producer price index. Basically, when companies produce goods, if it costs them more to produce it, then they pass those costs on to consumers. And then there is CPI, which is the consumer price index, where basically there's a basket of goods, and that could be, milk, can't talk, milk, eggs, and stuff like that. And when the price of those things go up, then the cost is passed on to the consumer. And then Jerome Powell spoke this past week on some sort of panel, and I think those are all the big major events. So there was a lot of stuff happening, but obviously it was really good inside of the market overall because everything pushed up bullish. So that's essentially my trading plan on the downside. And then to the upside, I kind of talked about this briefly, but basically What I would want to see is price to come back into this level, like the 39,835 kind of zone, and then I would want to see price push up. Give me some sort of like I'm more of like a candlestick entry type person. I mostly like to wait for the candlestick to close. But what I've noticed on really fast markets like gold, this market, and then even some companies within inside the stock market, it could be really hard to catch. So yesterday there was a move I couldn't even get filled. So that's why I really like Forex because you just press the button and you're in. So whereas options, you got to wait. But anyway, I would want to see price do some sort of consolidation or give me some sort of candlestick or something that is recognizable for me to enter the market and then ride it up to about the zone because we see price rejected once, twice, and it may reject it three times. So that lets me know that this is a really strong rejection area and it could reject there again. But there's also the possibility for price to continue to push up. So let's just say price continues to push up and a candle on some time frame closes above here, then okay, that's great because that lets me know that this would be the first target. Even though this isn't all that much range, I wouldn't be taking profit at this level. I would want price to continue to push up, but this would be the my take profit one, and then who knows up here. So typically what I like to do when price is moving in an area that it hasn't moved before, I literally just set my risk to reward tool to a 1 to 2 ratio. When it hits it, if it does, I'm taking my money and I'm just getting out of the market because I need to see more data in order for me to know where a price could potentially go. If it goes higher after I get out of the market, okay, that's more data. If it reverses after I get out of the market, okay, more data. But basically, I just treat it like there's always going to be another opportunity, and with the markets, there is. So even though I missed some really good moves today on gold and then another market this past week, I'm okay because now with that data, at least for the other market, I was able to capitalize today, take a trade, and I was instantly in profit and still in profit because I'm gonna let it roll. So you just got to look at the market in that particular way. But anyway, this is my breakdown for this particular market. If you love this video, go ahead and like the video, subscribe to this channel for more, and then also follow me on Instagram at Chart Confidence so that way you can get some more really cool tips in terms of becoming a profitable trader. See you soon.